Let's quickly talk about single-member LLC tax extension. So how do you file an extension with the IRS for a single-member LLC? Welcome back, folks, to another edition of the Awesome Sweaty Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka. Now let's roll. In today's conversation, I want to speak to you about single-member LLC tax extension. How do you file practically an extension with the IRS if you have a single-member LLC? Let me first give you an overview so you can quickly understand what we're talking about. So how single-member LLCs pay federal income tax. So what you need to understand is that when we talk about single-member LLC, we have to talk about something called a disregarded entity. Okay, so a disregarded entity is a type of business entity that is separate from the business owner. So even though this separation exists, the IRS disregards the separation for tax purposes. So there are a few business types that the IRS may recognize as a disregarded entity. Still, the most common example of a disregarded entity is a single-member LLC. Okay, and so a single-member LLC is a business entity owned by one member who has limited liability. So the IRS typically recognizes single-member LLCs as disregarded entities. So what I'm trying to say here is that a disregarded entity is a legal entity that is separate from the owner for personal risk purposes, but regarded as distinct for tax purposes. So let's further understand what we talk about when we are speaking about disregarded entity LLCs. So many entrepreneurs they really love the LLC business structure. Why? Because you have that segregation between the personal affairs and the business's affairs. So you are basically limiting your liability. So limited liability means that the owners of the business have protection for their personal assets. So someone who sues the company cannot reach an LLC owner's personal assets, such as a car or bank account. This is because an LLC is a separate entity. So sole proprietors, for example, do not have this separation. Okay, so the owner of a sole proprietorship could be personally liable for business debts. So when we talk about single-member LLC and taxes, what you need to understand here is that a single-member LLC qualifies as a disregarded entity because only one member owns it, and the member has not chosen a different tax classification. If the owner of an LLC chooses a different federal tax classification, they have to file tax form 8832. So they may be taxed as an S Corp or C Corp. Remember, even if you're a single-member LLC, you can be taxed as an S Corp or C Corp. So a single-member LLC will no longer be disregarded if the owner chooses corporate taxation. So if the owner of an LLC does not choose corporate taxations, then the LLC will be taxed like a sole proprietorship. This is really important. If you have a single-member LLC right now, and you do not choose to be taxed as a corporation, you will be taxed as a sole proprietorship. This means that your business income and expenses are reported on the business owner's personal tax return. So this is called pass-through taxation. So when LLC owners file their individual income tax returns, they will be responsible for employment taxes and excise taxes. So those are really important, okay? So choosing to be taxed as a corporation instead of a sole proprietorship means that the LLC is no longer a disregarded entity. So this is because the IRS taxes the corporation itself. Okay, so a disregarded entity is separate from the owner for liability purposes, but not for federal tax purposes. This is something you need to really understand, not for federal tax purposes. So what are the pros and cons of disregarded entity LLCs? Now, you may consider pass-through taxation to be a benefit of, let's say, disregarded entity LLC. So filing taxes for a disregarded entity LLC is more straightforward process than handling taxes for a corporation, because owners of corporations have to file a separate return for the corporation in addition to their tax return. Corporations also have to deal with double taxation. This is important to remember. And limited liability is also an advantage that disregarded entity LLCs have over sole proprietorships. So this could be important though to keep up with all the requirements to ensure that the LLC continues to be recognized separately from the owner. So remember, a creditor could always attempt to pierce the veil of a disregarded entity LLC so that they could reach the owner's personal assets. The only way you can prevent the a creditor from actually piercing that veil is by making sure that you are keeping separate books for your personal affairs and your business's affairs. It's really important. So if you have a single member LLC, it's important to have the right accounting procedures, the right accounting, I would say. So you want to have a business bank account, you want to have a proper accounting method, you want to have books and records. Everything must be separate so that creditors and judges could not look at your single member LLC as not a real business. So this is really important to keep in mind. So I just gave you an overview about the taxation before we get into the actual nitty-gritty. Let me talk to you quickly about the guidelines. So I want to give you some information, important information for paying federal income tax as a single member LLC. So the Internal Revenue Service, as I said before, if you have a single member LLC, the agency will treat you as a disregarded entity. This means that to an LLC owner like you, that the IRS does not consider your single member LLC separate from your personal affairs when it comes time to file taxes. Okay, so the same way a sole proprietorship pays the business taxes as part of their personal taxes, so too does a single member LLC like you. Okay, so as part of a single member LLC's tax reporting, you're going to have a Schedule C profit or loss from the business. So you have to attach that form, you have to complete it and attach it to your 1040, to your federal tax return. So the form contains the single member LLC profit and loss, annual income, and business expenses. So Schedule C is basically a recap of your business's income, expenses, profits, and loss for a particular year. Okay, it's important to remember. So we really recommend that a single member LLC owner maintain complete records associated with the income and expenses of the business. This is what I was just telling you earlier. If you want to prevent anybody from piercing the corporate veil, you got to take care of that. So this includes the ability to track deposits made to the LLC bank account and keeping receipts of all business-related expense transactions. So for a single member LLC with a home office, you want to keep thorough records that pertain to home expenses. So this information is used to complete Form 8829. We have actually covered it on another show. So Form 8829 is basically expenses for business use of your home and explains your home office deductions. Okay, so whether the LLC has a profit or loss, it is included on Schedule C. So since the LLC is considered a disregarded entity by the IRS, you, the owner, are required to pay taxes on the LLC's profits, whether the profits were distributed to you or not. The reason is that the IRS wants to make sure that you're paying taxes because the IRS is assuming that the single member LLC owner will receive any and all profits of the LLC, whether the profits are accumulating in the business bank account or the owner has withdrawn the profits. Okay, so the IRS approaches profits this way to deter single member LLC owners from withdrawing different monetary amounts out of the business annually in an effort to lower an owner's annual taxes. So should, let's say, a single member LLC owner choose to have their business classified as a corporation, a C corporation, income tax is paid differently to the IRS. This is important. So an LLC is more formal than a sole proprietorship, but not as formal as a corporation, which involves shareholders and a board of directors. Let's dig a little deeper here. Let's talk about, let's say, the benefits and drawbacks of having a single member LLCs. It is important to understand now. As an LLC, the business shares the benefits of limited liability of a corporation and potential tax benefits as a disregarded entity, right? So each state, one thing we have seen in our research is that each state has its own regulations that determine the eligibility of a single member LLC. So whether if you're in Texas, for instance, or you're in New York, or you are you are in Illinois, you are in California, the rules are different. Okay, so you want to check with an EA, an enrolled agent, a CPA, a certified public accountant, or a tax attorney, or someone else who has a clear understanding of the tax rules, so they can really walk you through the whole process. So a single member LLC provides the owner with more control of the business. Okay, a downside of this is that a single member owner can be, well, one thing we have seen is that, when you have what we call the informality of the LLC, that can prevent any owner from establishing credit. Because you're a single member LLC, banks are looking at your business and you as the same person. Even though legally you are separate, but the banks are saying, hey, and creditors are thinking that they will pull they will do a hard pull on your personal credit. Okay, so, and single member LLC owners can opt to be taxed as a corporation or a sole proprietorship. So one of the main benefits of an LLC versus a sole proprietorship is that an LLC provides limited liability. This is one thing I want you to take away from this show. They provide limited liability. So that means that a single member LLC owner is not typically liable for business debts. So limited liability also protects the owner's personal funds if the business goes bankrupt or, say, is unable to pay its debts. Okay. Now, one thing I want to say here is that some states do not allow single member LLCs, though. So you have to remember that LLCs have the benefit of pass-through taxation. So with pass-through taxation, well, we said this before, so profits are basically passed to the members, who are then responsible for reporting the income on personal tax returns. So when they file their personal 1040s, they have to report the income. And a single member LLC owner is the same as a sole proprietor in that the owners of both companies or both entities are in complete control of the daily operation of the business. The member also makes all decisions without input from other members, and the owner receives all of the LLC's profits. One thing I need to say, just to close on in this section, is that an LLC requires much more paperwork than a sole proprietorship, along with interaction with the state and at the federal level. Let's talk about tax designation. So it's important. So let's talk about LLC tax designations. So when you compare to, let's say, other entities, the LLC structure is pretty flexible when it comes to reporting business earnings on a federal tax return. So this flexibility refers to actually the choices that LLC members have, really. Okay. So if you are let's say you are the only LLC member, you can file as a sole proprietor or make an election to treat the business as an S corporation or a C corporation. One thing you need to understand is that multi-member LLCs have the same corporate options, but since more than one member exists, they can also stick with the default designation and file taxes as a partnership. This is one thing that's very important to remember when you are speaking about multi-member LLCs. Okay, so these designations are significant because they dictate whether you will file for an LLC tax extension on Form 7004 or 4868, and how much longer you have to file. So this is really important. Whether you are a multi-member LLC or a single member LLC, the forms are different. Okay, so let's just dig a little deeper. So, as I said before, the IRS will actually treat you, if you have a single member LLC, will treat you as a disregarded entity. So unless you file otherwise, okay. So if the IRS treats you, if they see you as a disregarded entity, you have passed through. You are seen as sole proprietorship. Okay, you are seen as a pass-through entity. And you don't pay taxes at the business level, but you pay taxes at the personal level and on your 1040. So big decision time. When we talk about pass-through taxation, you understand what I said? Pass-through taxation means what? This is a taxation method that applies to sole proprietorships, partnerships, and limited liability companies, where the owners pay taxes on all business profits on their individual tax returns. Okay, so big question now, big decision time. what is your single member LLC classified as? Are you filing federally? Are you filing a C corporation taxes? Are you filing as an S corp, or are you filing as a sole proprietorship? In other words, you are filing your 1040. Put in the comments below and tell us how you are actually navigating the whole process. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Sweetie Kiwi Show. We are still talking about single member LLC tax, and we are also talking about single member LLC tax extension. So let's talk about extra time extension. So if your LLC is designated as a partnership, C corporation, or S corporation, you can obtain additional time to file the entity's tax return on Form 7004. Very important to remember that form. So in the case of, let's say in the case of partnerships and S corporations, LLC members are responsible for reporting their shares of LLC profits on their personal returns, right? And moreover, it's the members, not the LLC, who pay the income taxes as well. What Form 7004 does, however, is to provide LLCs designated as partnerships and S corporations additional time to file their respective information returns. So for partnerships, the information return is prepared on Form 1065, while for S corporations, it's prepared on Form 1120S. So depending on what kind of designation you choose at the federal level, at the federal tax level, you're going to have to file a different form. Because C corporations also, they are responsible for paying the tax reported on the corporate tax return. So they use a Form 1120, which can be filed 6 months after the deadline when Form 7004 is filed. Okay, so the easy way to file an extension application, you can actually ask for an extension on personal tax returns. So if you are one of the pass-through business types that we have talked about, you can actually extend. You don't have to file Form 4868 if you make a payment using one of the electronic payment options that the IRS has put at your disposal. Okay, and so basically, if you are using Form 1040 ES to make your payments, then the IRS will automatically process an extension of time to file when you pay part or all of your estimated income tax. Okay, so the easiest way to get an extension is to pay all or part of your income tax due and indicate that the payment is for an extension using the IRS direct pay system, EFTPS, or your credit or debit card. So you will receive a confirmation number for your records. Okay, and so for extensions for business tax returns, so for 7004, Form 7004 for corporations, S corporations, and partnerships cannot be filed through the personal tax filing system. You must use the IRS modernized e-file MEF platform. Okay, so you can also mail in an extension application. This is not a problem at all. You can e-file using a software program or tax professional. Okay, and again, you can do so by filing either Form 4868 or Form 7004. Okay, so basically the thing here is that the only qualification to apply for an income tax extension is the requirement that you file by the original due date of the return. You must also estimate and pay any taxes due by this date to avoid penalties. Okay, so the due date for personal income tax return on Form 1040 is April 15 of the year after the tax year. So if April 15 is a weekend or holiday, the extension is due the next business day. Now let's talk about, let me give you more info that really I want to explain what basically you are dealing with if you choose to go that route. Remember, you may have heard that the IRS may penalize someone who files an extension application, but the IRS does not select returns for tax audit based on whether the taxpayer requested an extension. Okay, they select tax returns for audit based on random selection and on screenings, comparing a tax return with norms, what they call norms for similar returns. Okay, so let me talk to you. If you are a single member LLC, if you file as an individual, okay, basically you pay taxes on your 1040, which is why Form 4868, the extension form used by individuals, is submitted by you in your own name to obtain an automatic 6-month extension to file. So it's automatic 6 months. So Form 4868 is also appropriate for the personal returns of members of an LLC that's designated as a partnership or an S corp. Remember, extensions do not delay paying taxes. So the 7004, and 4868 forms are barely 1 page in length and require basic identifying information. So both can be e-filed or email or mailed to the IRS, though you can obtain the 4868 LLC tax extension by paying your estimated tax bill with a credit card or debit card and without having to file the form. And one important thing to remember about all extensions, and I mean all extensions, is that they only allow you to file your taxes late without incurring penalties. They don't, however, give you more time to pay the tax on your LLC's profits. So if you fail to make sufficient tax payments, late payment penalties will accrue throughout the period of extension. Very important. So if you have to pay federal income taxes, you have to understand, to report and pay federal income tax on your single member LLC, you will need to attach Schedule C, profit and loss from the business, to the personal federal income tax that you file with the IRS. Very important, okay? And one thing I also want to say before closing on today's conversation is that you must pay tax on all profits, whether you distribute it or not. Okay, it's not about, oh, I'm gonna keep the money in the company so I don't have to pay taxes. No, if you make a profit, if you earn a profit this year, and whether you distribute the profit or not, the IRS wants to have their fair share of your profit. So you need to pay taxes on that profits. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about single member LLC tax extension and single member LLC taxes in general. So I gave you an overview. I spoke about the guidelines, the pros and cons, the tax designations, the extra time, and I gave you more info. Thank you so much. I will speak to you another time. But until then, remember, stay marvelous.